Hello fellow compounders, welcome back. Today, we're diving into the fascinating world of stock investing. If you are a beginner, I'll guide you through the reasons to invest in stocks, what you need to get started, and how to simplify the process through index funds. Let's get started. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor and you are responsible for your own financial decisions. So, why would you invest in stocks? There are 4 key reasons. Number 1, wealth creation. First, stocks offer a way to build wealth. Think of the legends like Warren Buffett and Peter Lynch. Buffett started investing really early and became a multi-billionaire. He has over $100 billion right now. While Peter Lynch led the Fidelity Magellan Fund to an annual return average of 29.2% while he was at the helm. 2, capital appreciation. Stock prices tend to rise over time. This provides capital appreciation. For example, investors in companies like Amazon, Apple, and Google have seen their initial investments grow substantially. Remember that when you own a stock, you are owning a piece of a business. 3, income generation. Some stocks pay dividends. If you invest in these stocks, you'll get a steady stream of income. This can be especially useful during retirement or when you need a consistent stream of income. It's like owning a business with management that pays you part of the profits every 3 months. Number 4, inflation protection. Stocks can help you protect against inflation. Good businesses usually have pricing power, so they can pass on inflationary pressures to their clients. Therefore, their revenues and profits will grow, and the value of the stocks will increase, which can help your portfolio outpace inflation. So, what is a stock? In the simplest terms, a stock represents ownership in a company. When you buy a stock, you're buying a piece or share of that business. As a shareholder, you usually have voting rights at shareholder meetings, and you have the right to your portion of the economic benefits of the business. These are the profits and the dividends of the business. Stocks can be private or non-traded or public, which are usually traded on an exchange. For example, an example of a privately held stock is if you went into business with your college friend and opened a car wash. And if you had incorporated, that is a privately held share. And stocks could be publicly traded, which are the ones that you see on the stock exchange or in the stock markets. Stocks like Apple, Tesla, Starbucks, and others. Now, what do we need to start investing in stocks? Let's break it down. First, you need a brokerage account. This is how you access the stock market. There are 2 types of brokers: full-service brokers and discount brokers. Full-service brokers have humans to assist you in person or by phone. Discount brokers are usually online through a website or mobile app. Examples of full-service brokers are Merrill Lynch and Goldman Sachs. And discount brokers examples are Charles Schwab, Fidelity, M1 Finance, E-Trade, Robinhood. And for beginners, I suggest checking out Robinhood, M1 Finance, and Schwab. I'll post links in the description. Second, initial capital. You need some money in order to invest. But don't worry, you don't need a fortune to start. Even with $100 or $200 can be a good start. And number 3, the most important thing is that you should have a basic understanding of stocks, what they are, how they're traded, and what affects their prices. You should be aware that there's risk involved in stock investing, so it's important to do your homework. I usually use a screen that Warren Buffett and Charlie Munger use at Berkshire Hathaway. I invest in 1, or A, stocks of businesses that I understand, B, that have a sustainable competitive advantage, C, that are led by honest and competent people, and D, that I can buy at a reasonable price. That's pretty much it. It's a very simple screen, and that's the screen that Warren Buffett has used over his investing career. 4, investing in stocks using index funds. Now, let's talk about an easy way to invest in stocks: index funds. Thanks to John Bogle, or Jack Bogle as we call him, the founder of the Vanguard Group, we have a simplified investment vehicle, the S&P 500 Index Fund. He created the first S&P 500 Index Fund for Vanguard. Index funds are a type of mutual fund or exchange-traded funds that track a specific index, like the S&P 500. This fund is a basket of the largest 500 stocks traded in the United States. Index funds like Vanguard's S&P 500 Index, ticker VOO, provide a broad market exposure through a diversified investment portfolio at a very low cost. The expense ratio of this fund is 0.03%, or 3 basis points. This means that for a $10,000 investment, the annual cost is $3. Now, let me tell you a secret. If I were starting out as an investor right now, I wouldn't be investing in individual stocks right out of the gate. Wait, what did you say? If I were starting out as an investor, I wouldn't be investing in individual stocks right at the beginning. I would start, or I would wait until I had $100,000 to invest. I know. I could probably start an individual portfolio with $100 by buying fractional shares of individual stocks. However, I don't think it's really worth the effort. Even if I made 50% return on the $100 that I started with, it would only be a $50 gain. So, in the beginning, at the start, I am better off improving my skill sets or my skills so I can earn more money to invest. I would be focusing on increasing ways to add value at work in order to increase my salary or my earnings. And in the meantime, I would be investing in index funds until I got to that $100,000 mark. Here are the steps to invest in index funds. Step 1, open a brokerage account. Research different brokers and choose one that suits your needs. Step 2, choose your index fund. An S&P 500 index fund could be a good starting point. The most popular S&P 500 funds are VOO, Vanguard's S&P 500 ETF, IVV, iShares Core S&P 500 ETF, and SPY, Spider's S&P 500 ETF. Other funds that I use are VTI, Vanguard's Total Stock Market Index, that tracks the CRSP US Total Stock Market. It's a basket of 3,837 publicly traded companies in the United States. And by the way, the 500 stocks that are in the S&P 500 are holdings of VTI also. They make up about 85% of the weight of VTI. And the other fund that I use is VXUS, Vanguard's Total International Stock ETF. It tracks the FTSE Global All Cap ex-US Index. It holds 7,976 stocks of companies around the world outside of the United States. Step 3, decide your investment amount. When you use a broker that allows fractional share trading, there is practically no minimum investment size. You could invest $1 if you wanted. If the broker doesn't offer fractional share trading, then the minimum investment will be the price of one share. Also, since almost all brokers don't charge commissions for trading stocks anymore, trading one share is really fine. There's no cost. Step 4, place a trade to buy the index fund. It's as simple as typing in the fund's ticker symbol, entering your investment amount, and clicking buy. And step 5, invest consistently. Regular investments over time can yield remarkable results. This strategy is known as dollar cost averaging. Investing in stocks, especially through index funds, is a powerful way to build wealth over time. Despite the inherent risk, patience, consistency, and informed decision-making can guide you towards achieving your financial goals. Please leave any questions in the comments below. And thanks for watching. See you in the next video.